my fellow investors. I want to discuss a company in Finland. It's called Ovaro, and it's a real estate investment company which is currently trading at a very attractive valuation on the Finnish stock exchange. So just as a background, I'm a Finnish retail investor currently living in Germany, but I know the Finnish market fairly well. The Ovaro case is interesting because this is one of the, if not the only, Graham type value investments out there in the Finnish market currently. It holds assets it holds assets 1,600 apartments, which are worth 194 million euros. It has some debt. If you look at the balance sheet of the company, it has 109 million in debt. So if we have 190 million in assets and reduce from that the 109 million in debt, we have 81 million in net assets. And the interesting thing is that currently Ovaro stock is trading, here you can see it's trading at a market capitalization of 47 million. So basically it's trading at 60% of its net asset value. And always when I look at investments, I always look first at the downside. So as you probably have heard Warren Buffett's 2 rules of investing. Rule number 1, don't lose money. And rule number 2, never forget rule number 1. So as an investor, I always look at the downside. What is the risk and what can I lose? So in an investment like Ovaro, it seems that it's actually pretty difficult at the moment to lose money, because even if the Ovaro would cease its operations, it would liquidate its assets, it would basically sell its properties, it would then receive in the order of 190 million. It would pay out its debt of 109 million, and then it would have 81 million to distribute to its shareholders. And because the company has 9.6 million shares outstanding, it means that per share net asset value is 4.7 euros, and as you can see right now it's trading at 4.8 or 4.9. So basically it's trading at the price where well, even in the worst case scenario, it would be difficult to lose money in Ovaro. So that's the downside is fairly limited in this investment. Even if we would assume that the company has exaggerated the value of its properties, there's still a fairly huge margin of safety, as it's trading currently at about 60% of the net asset values. I originally come from Finland, even though I have lived for years in Germany. So, but I own a property in Finland that I rent out. So I sort of I have a feeling for the market in Finland, and I have checked out on the Ovaro webpage. You can find there the list of the properties they own, or the apartments they own, and it makes sense. You know, the prices they claim they make sense. Yeah. So it's nothing like they would give some ridiculous numbers and fool investors. That's not the case there. Of course, you need to be careful and count in a reasonable margin of safety. Currently, it's 40% to the announced numbers, but in case there is a, let's say, a fire sale, they need to quickly liquidate the apartments. Probably they would need to sell them even cheaper. So maybe 50% would be niveau to look at. So well, that's the downside. What about in the upside? What are the possibilities to make money on this investment? So I found another company in Finland that operates in the same area. It's called Kojamo. I won't go into that company. I won't say anything about that company. Apart from that, I found that it has funds from operations that are in the order of 2.5% of its asset value. So if Ovaro would, with its new management, manages to start renting out the properties, the apartments, in a, let's say, orderly and reasonable manner, and the operations resume, I think it's very common sense to assume that Ovaro could make the same amount of money, and probably even better. But let's assume these figures. So then it would make around 5 million, which would equal about 50 cents per share a year from as funds from operations. So so there they have paid the interest rates, the all kind of fees and salaries and all that. So that's basically the money they make from their operations. Out of those 50 cents, they could, I think one could assume they could pay a dividend of, let's say, 40 cents. And if we would assume the stock market would value the company at so that the dividend would be 4% of its stock valuation, then Ovaro's stock price would be around 10 euros, which is basically a little more than double what it's currently trading at. So, and I think it's not unreasonable to assume that Ovaro would start making these kinds of funds from operations within 1, 2, 3 years. So the way I see it, Ovaro is an investment with a limited downside. It's basically already trading at a discount to its liquidation value, at a huge discount to its liquidation value. The upside is significant. Even a doubling of the stock price is not. Then, if the stock price would double with these kinds of earnings, I'd say then it would be trading at a fair valuation. So that's probably a moment where I would start considering selling the stock. But at the current valuation, I'm pretty happy to buy more of it. Just for disclosure, I bought my first set of Ovaro stock in November, and some more now at the end of January. So, and I plan to buy more if the price stays below 5 euros, and especially if it goes even lower, then I'll buy more, and I'll consider selling if it goes up to 7 or especially if it goes to 10 or more, then I'll sell. Of course, you need to pay your own due diligence and consider how this would fit your portfolio and your risk-reward appetite. So this is just for an idea to consider. I'm happy to read comments that add value. That maybe there's something that I have missed. please tell me if I have missed something or forgotten something or calculated something incorrectly. And if you have similar investments, maybe in the country where you live, of course, I'm happy to hear about them. Thank you for watching, and see you in the next video.